At the heart of SoFi's business is lending, whether that's to their own balance sheet, selling off those loans to other institutions, or originating those loans directly for other institutions as well. The reason I bring this up is because whenever we get insight into other lenders, this can give us great color into how SoFi might be doing. I want to draw your attention to Lending Club, as they just ended up showing off their earnings yesterday, Q3, with a surprise revenue jump of 4% and EPS of 23%. Lending Club is another online digital bank. They have a fully chartered licensed bank just like SoFi. Personal loans is their biggest product. They also have deposit accounts and other solutions that similarly compete with SoFi, like the SoFi Relay product that they also tried to compete with. They're very similar. Obviously, SoFi has done way better over time and their execution has been much better, but still, Lending Club, if they're doing well, that's a very good sign. First up, we have to understand that personal loans is SoFi's bread and butter, and the types of personal loans that they give out, which is consolidating credit card debt, is exactly the same bread and butter product that Lending Club has. That's why they're my favorite comparison. And what we ended up seeing is that consumer loan originations ended up raising 37% year over year. Now, it's obviously not been as great of a chart in the last year as what SoFi has done, but still, this massive bump is very exciting. They're also expecting roughly 35 to 41% growth next quarter as well. You also have to understand that the quality of borrower that Lending Club has is still not as adequate as what SoFi is doing. Although they're originating much less, about 1/3 of what SoFi is doing, they're actually doing it with less restrictive credit boxes. SoFi actually goes after a more affluent customer while still doing much better in terms of performance. But still, that doesn't stop us from seeing signs popping up that they are still doing well over time. You see net interest margin actually increase as the cost of deposits are going down. Now, funnily enough, and I've done many videos on this, Lending Club actually pays a much higher rate for their deposits, even though they're growing much slower than SoFi, meaning that people are not just coming for the high cost of SoFi's deposits. You can get even better rates at a company like Lending Club, and still people choose the SoFi brand name. But still, I foresee net interest margin improvements on SoFi as well. This is very good. Lending Club also had some amazing comments. Let's go ahead and read this. Credit performance remains excellent. We continue to outperform the industry with delinquencies and charge-off metrics in line with or better than our expectations. We continue to see strong performance across our vintages. I would highlight that the net charge-off ratio also continues to benefit from the most recent vintages we've added to the balance sheet. We expect the charge-off ratio to revert upwards to normalized levels as these vintages mature, but these anticipated dynamics are already factored into our provision. All great stuff to see that credit is doing extremely well. And this is upper bound credit, by the way, a credit box that's very similar to what SoFi is doing, even though SoFi's is even higher. And their delinquencies and charge-off metrics are doing potentially better than expectations. That's allowing them to see revenue skyrocket and diluted EPS go up 185% year over year. And take a look here. GAAP net income went up, book value went up, tangible book value went up, return on average equity also went up, and return on tangible common equity also improved. You don't think any of these things are going to be seen with their closest competitor, SoFi, as well? I mean, we're looking at a very great macro environment right now. Let's also take a look at their efficiency ratio that has gone down, which is what you actually want to see. We want this to be as low as possible. 61% still improving, great sign. And marketing is also going up, okay? SoFi, I've also said, spending a lot more because they see great potential. It also shows up in our website traffic and in the amount of app downloads. So expect that SoFi is also going to be paying a lot more for marketing, but that's also going to result in great returns. So some people can look at that as a bad thing, but I'm looking at it as very positive, as SoFi sees great insight, or Lending Club sees great insight into great future returns. Like I said previously, their total originations are expected to grow by 35 to 41% year over year. And also, investment in marketing in Q4 to support 2026 growth is also very interesting, meaning that we can see strong growth if they try to replicate this at SoFi, that they expect growth to continue all the way through Q4, and originations are expected to grow through Q4. But then they had this to say in their earnings transcript. As we look ahead, the business entered the fourth quarter with significant momentum. Loan investor demand remains strong, loan sales pricing continued to trend higher, and our product and marketing initiatives are driving high-quality volume growth. essentially meaning their version of their loan platform business, their ability to sell loans and also originate loans for other investors. The amount of demand is huge. That's extremely exciting knowing how strong of a product the loan platform business is for SoFi. It's very important that that product does well. SoFi is of much better quality than Lending Club, in my own opinion. So all of these signs is just going to be a multiplier for how good we end up seeing SoFi. But then we got even more news from SoFi and what continues to get me excited about this investment into the future. First up, payments.com, which is one of the leading news sources for things like fintech and all of these other banking related services, ended up showing off a ranking of their favorite digital banking apps ranked. SoFi, for the longest time now, multiple quarters in a row, has now ranked number one and has not changed on this list. Underneath it, Dave, Chime, MoneyLion, Ally Bank, Acorns, Vero Bank, Discover Mobile, all these very popular names. SoFi also came out and said, hey, we expanded level 1 options. So now everyone should have it in their app. Make sure you guys check for those updates if you're looking for that in the app stores. They also said crypto is coming back. There's a high likelihood that it's expected to release on December 1st. So expect that if you are interested in crypto. Anthony Noto also said that you'll be able to transfer your coins from Coinbase or Robinhood directly into SoFi, which means you'll need some form of external wallet to do that. Maybe SoFi is also looking to create a SoFi wallet. Then he also commented under another customer's use case for SoFi, saying, I wish they would allow customers to open a joint bank account while already having an individual account as well. He said, that's also coming. That should be around already, but it's not. A lot of people have been requesting for it. It's very highly requested, but according to Anthony Noto, the CEO, that's coming very soon. Then we also saw from Ken Megan post on X that Android app downloads is now skyrocketing. Usually, especially on Android, we'd hang around the 30s or 40 marks. Right now, we're actually above names like Wells Fargo and Chase, actually at number 14 on the App Store rankings for financials. I checked the Apple App Store and they were roughly about 26th, which is a little bit lower than the Android App Store rankings, but still much higher than what we saw previously whenever they were in the low 30 marks. So we're still seeing lots of improvement on both app stores. Overall, guys, I've never been more bullish. I continue to see more and more signs that SoFi is going to do well in Q3. Maybe I could be let down. Maybe something is going to happen that I'm not foreseeing right now, but I'm happy to see what you guys are concerned about in the comments down below. If I'm not paying attention to anything, let me know. But until next time, bye for now.